So my name is Ghosh. I'm a scientist with the Alliance of Biodiversity International and CGIAR. So this is one of the organizations under the broader umbrella of CGIAR. Many of you probably have heard the name of this consultative group who we are active across multiple regions in the world, mostly working in the low and middle income countries. And traditionally, who you have known CGIAR before, you must be wondering, because CGIAR is not known for their work in insurance. Like they are generally, known for their work with different type of, let's say, varietal development or, market analytics, doing some climate analysis, But recently, what we are seeing more and more is, just providing an improved variety of seed, just providing climate information services is not enough. The farmers, what they are looking for is a more holistic package, which is a combination of many, inputs that they need for the farming, and that includes also the financial solutions. So that's how, a small group of researchers within the CGIAR system, primarily led to one of the other centers, which is called IFPRI, International Food and Policy Research Institute. They have started doing, a lot of work around the insurance sector. So what I'm going to talk about today is generally give you an overview of the index-based insurance services in East Africa. It's generally we talk about East Africa, but sometimes it will spill over to Southern Africa also. So let's talk about this broad area, and then we'll talk about what are the challenges, what are the barriers. Like we are talking about insurance, but not. We are only catering a very small, we are able to reach a very small percentage of the smaller farmers. So what are the challenges in there? And talk about two different innovations that we are trying at this moment that has proven to be relatively useful to overcome some of those challenges. And then I'll summarize and also talk about, mention some of the insurance activities that we are currently involved. So just to give as a background, if you are not familiar with index-based insurance, is basically what happens in this case is there is an index that is being monitored for the insurance payout. So instead of something like loss of production, like there is
Ani, excuse me. Have you moved your screen, or you're still?
No, I'm still here. Okay. So I'll just move to
yeah, just to be sure it's okay.
Yeah. So index is basically that particular parameter that we monitor. So it could be something like rainfall, right? So we are expecting, let's say, 500 millimeter of rainfall across the season, and if the rainfall is below a certain trigger, let's say in this case 200 millimeters, some of the payout would be provided to the farmers. So the advantage of this is we don't have to do the costly field visit to measure the production at the end of the season. So that's why it is becoming more and more popular across various stakeholders, because it's much easier to scale, it's much more cost effectively, it can be developed in relatively low amount of time, as well as we can reach out to farmers who are in the remote areas. So in the next slide, I want to talk about the situation with the different climate hazards, like the insurance are a risk management tool against the different hazards. So this is an analysis we did earlier last year as part of our portfolio program. So, and this is in the Eastern Southern Africa. You can see a different number of hazards that we are dealing with, and this is particularly important for insurance design because the previous speaker from ARC, he talked about having a drought index or maybe a flood index, but there are other hazards that we need to probably cover. So, and what is more interesting these days is you can see the interaction between hazards. So like we are hardly seeing a large area under drought. What we are seeing that a combination of different hazards occurring at the same place. So if maybe one season you are having drought, in the next season you are having some sort of climate variability effect, right? With the rainfall variability, and the market we are looking at, all these hazards can potentially affect the production, and it can if you put in the financial value to it, we are looking at tens of billions of dollars that can be lost because of this hazard. So the market for insurance is actually huge, and we are not nowhere close in reaching that particular limit. So this is more like an input for the for the private sector partners or the insurance companies to attract them. There is a lot of demand, there is a lot of opportunity. In the next slide, I want to talk about a bit of the insurance program, different insurance programs that are active in this region. And this list is not nowhere complete. So this is just some example case studies that we have found while writing this paper, which was published in Nature Journal last year. So you can see in terms of the global market, like the weather based index. So when we are using the weather parameters as index, we can see there are quite a bit of active insurance programs that has been active, and they are using either satellite data or station data. So for example, in Rwanda, there is this program around rainfall, similarly in Mozambique, similarly in Zambia. So most of these weather-based index programs, they focus mostly on the rainfall, and you can see like it's been active fairly recently, like all the activities that we are looking at has happened in the last 10-15 years. Similarly, when we talk about vegetation index, this is something where remote sensing comes into play. So what we do is instead of monitoring weather parameters, we monitor the vegetation health using some sort of indices. So the higher the value of the indices, the healthy the vegetation is, the healthy the crop is. Similarly, we can have some designs where we can bring in multiple sources of data, not only relying on only vegetation or only weather. We can try to bring in different type of indices to cover the to use as the parameter for the period. So I think I just wanted to point out one of these insurance product that was mentioned earlier, or somewhat related, is this EBLI program. This is the livestock program that is supported by World Bank and is kind of developed by ILRI and other partner. So ILRI is one of the other CGIAR agencies. So what they do is basically they look for this vegetation index called normalized difference vegetation index from the remote sensing platforms, and they look for, so what they are monitoring is actually looking for the forage availability, vegetation health. So it means like more the forage, the more food is there for the livestock. If there is less forage, the livestock will be will not have enough food, and then that would cause mortality. Yeah, so what we, while doing this work, what we saw that there has been quite a bit of activity going on, in Africa. But what was surprising is, many of these activities were at a pilot level, and then there was not many opportunities of moving them to the scaling up phase. There was the business model was not there, due to different reasons to make it, sustainable in the longer term. So there has been some studies done, and I've tried to summarize what are the major barriers behind the scaling of this kind of insurance products. And again, this list again is not complete. So the first one, the key one, is the knowledge, right? Many of the farmers, they don't know about climate change. They don't know how insurance can help them. So that's a big problem. And even though they have heard about insurance, they don't know how that actually works. So and think about even for a common person, like even if we know about some financial product out there, let's say Bitcoin, right? We know about Bitcoin, but many of us don't know how that works. So we are always maybe slightly scared. I'm not saying that everyone should go and buy Bitcoin, but it's just an example. And then there is this other issue, is the design risk, which basically leads to a number of problems. And the most major one is basically, the farmer are insuring their product, and in case of any hazard, they are not getting the payout. So there is a mismatch between what the farmers are expecting, what is happening in terms of the extreme weather events, and what the payout they're receiving. So this is basically happens when you have a poorly designed index insurance, and that could happen due to you don't have quality weather data. So the rainfall parameter, or the rainfall the source for the rainfall data that you're using, maybe some satellite data or some grid data, it is not actually capturing the variability in the region where the farmers are insured. Or maybe there are no weather stations nearby that is informing the insurer that there is an extreme event happening. And there are several other issues, like, for example, relevance, is one important one. So, farmers look for something which is useful to them, right? But if we set up a very high trigger and say that, okay, I'll give only payout when the rainfall is 0, that's not going to happen. That's in the level of uncertainty, or need for this 10 millimeter. So that's another problem. It's somewhat related to the design, and then access we talked about is somewhat related to knowledge. There was a question asked during the last talk that can the farmers directly buy insurance from ARC, right? So it's the same question. Okay, as a farmer, I want to buy insurance. Who do I go to? This is not always easy. And then the capacity, right? So capacity in the sense that, all of these pilot projects that I was mentioning about, there are different development organizations, they come, they try to, develop different products, but when the project ends, are you able to transfer that learning, transfer that capacity that was developed during the project to, to the local institutions, local companies, so that they can continue with their offering. So to do that, to remove these barriers, I'm just going to talk about two different, two examples. So in terms of the knowledge, what we are trying to do in Kenya and also some other countries is working with this TV show called Shamba Shepa, which is one of the most popular farming TV shows in Africa. Like, it has between 6 to 8 million of viewership for each episode, and all the episodes are also stored in YouTube and also in the Shamba Shepa website. So what we are trying to do is using this edutainment model, we are trying to develop contents around insurance, right? We want to bring in different farmers, share their experience around climate change, at what situation they have, experienced crop failure, and then bringing in other cases where the farmers have insurance, right? So how insurance had helped them to stay out of the poverty trap. So sharing these kind of different experiences, as well as bringing partners from the private sectors and letting them know how how farmers can register for different insurance, how they can access, and how the whole process works. So this is an ongoing work that is going on. So I encourage you to go to the website. I've just given one link, but there are at least more than 5 episodes that has been covered so far, and we are working on getting a few more in this year. The next one that I wanted to talk about is how we can develop a better insurance product, as well as involve the farmers in the process. So this is a program called Picture-Based Insurance Program. It was first launched in India, and then it was launched in Ethiopia, and now it is quite active in Kenya. So the idea is, instead of this costly field visit, we want to involve the farmer in the process of the field monitoring. So every farmer who will buy the insurance, who will be part of the program, they will need to send a photo of their field from a specific direction, following a specific set of trading. They will be able to send that photo, and it doesn't need to be the farmer all the time. It can come from someone at the village level. We call it a village champion model. So one champion from the village who would be responsible for, let's say, 100 farmer in the village. At regular interval, they will be sending us the photo. So the advantage of that process is, one is the farmers see that they are actually involved in the process, right? They are providing constant feedback. And then the second advantage is we are able to regularly monitor the field, how it is performing, and then we are able to somewhat related that with the satellite-based observations, which are the traditional indices, and then in case of any damages, we are also able to check the damage through the photograph, field photograph, and make the decision. So there is no need to, do the costly field visits. There is no, the farmers don't need to wait for a long time, to get their payout. So it's relatively straightforward, and and time-wise, it's also provides the farmers the money at the time when they need it the most. So in summary, it's a broad topic. It's a really broad topic that we can probably spend days talking about. But what we have found so far, talking with different partners, is we have to kind of foster a data sharing culture between different stakeholders, because it's all about data. If we want to develop a good index product, we need data, right? We need data about how the farm management. We need data about production. We need data about farmers' perception. What does the farmer think about the risk, right? Whether they are, they are resilient to certain risk, or whether they are, demanding for something else. So that kind of data we need is, and there is no one-stop solution for that. County governments are source for one kind of data, while organizations like Tomorrow Now, they are source for another type of data set. So we need to bring all the partners in. We need to work with all of them together. And then the other aspect that is not been looked that much is the quality of these different insurance contracts, right? So like anyone can at this point go out and start an insurance contract, but what the end product is, if we have too many bad contracts flooding the market, the farmers will continue to lose interest on this kind of product. So we need to, kind of develop a regulatory framework which is in place, but at the same time we need to put some sort of quality evaluation on top of it. And this is kind of interest from the CGIAR type of research. And then in terms of the insurance projects, we are involved currently in different countries in Eastern Southern Africa. So we have this project called Amazing, which is funded through the ISF Insurance Resilience, where we are trying to bridge together, field scale soil moisture product from a company called Vanderset, which has been recently procured by this company, Planet, and with the picture-based insurance. So the advantage of soil moisture is it's based on the microwave synthetic aperture radar data set. So even if we have cloud cover, we will still be able to get some signal from the soil moisture. Then what we are also working on is how we can bundle climate smart practices with insurance, and the other projects that are that we are currently involved in, how we can develop some sort of hybrid designs, right? If we can bring in crop simulation models with, satellite remote sensing, whether that improves the, quality of the insurance product. Yeah, and so these are some of the examples that I wanted to give. The time is short, but I would like to hear more from you. And what we are looking at this point is more scaling partners, right? We have done a lot of research around a different aspect of the insurance contract design, but we want to make the product more scalable, reach out to more farmers. And being a research organization like CGIAR, we are in a great position because we look for collaboration in a spirit of open science, open data culture. So thank you again for the invitation, and I'm really happy to talk to you all. And then it's great to see all these other presentations.